Good evening, Eric Mashinsky with the Gold Investment Letter. It is Monday, February 29th, 2016. Thought I would bring forth a bit of a video update tonight. I will have some new typed content. We have at least one buy recommendation that will be going up on the blog. It's one of the more exciting picks that I think I've had in quite some time. It's also a fairly large cap opportunity, Canadian based at around a $5 a share price tag. Plenty of liquidity for everybody to get involved, and really could be a darling of what seems to be and looks to be a new gold bull market. And I wanted to talk tonight about the likelihood or lack thereof that we are in a new bull cycle in gold and silver and mining stocks. Obviously, since the beginning or second week of 2016, gold, silver, and the mining stocks have really exploded with a lot of power and some really good volume as well. And the strength has really surprised people quite a bit. And the question then becomes, is this a bear market bounce, which we've seen before? And to be blunt, with the way that these things work typically you only have extremely violent moves in bear markets and that are on the upside, and really violent down moves in a bull market. It's very common as time grinds on and the sector continues to go lower. Technical bounces that are pretty fierce are common, and we saw that a few times in the last couple of years for gold and gold stocks. However, I feel different this time. It feels different. That's not anything other than what I'm saying, in a sense that, I've got my charts and I'm looking at the charts as we speak on GDXJ. And absolutely, we have broken through the 50-week moving average, which has been a critical area of resistance for the mining stocks. And many of the favorites that we own, like McEwen Mining, Kinross, New Gold, the producers have exploded past those 50-week moving averages. And I had shown last year in the fall how, the example was with IAMGOLD and Kinross. And I had posted the weekly charts that focus on the 50-week moving average. And it was clear that, the odds were that we were going to roll over, even though there was a lot of excitement and enthusiasm in that rally. I had a lot of caution at that time. This time, I still have some caution. I would like to see a little bit more of the action confirm that we're in a new bull cycle over the coming weeks. However, what my gut is telling me, along with the action I'm seeing in some of our favorite investments, I think this is it. I think that, we've had a 5-year, as of March, it would have been a 5-year bear market in gold and mining stocks and silver as well. I've talked about this many times. The severity and the duration combination here is the worst in history, literally on record, that we've seen from mining stocks. Gold itself, I think that a lot of people that follow this market and even that are bullish long term, we all started to get pulled into this mentality that, okay, it's going to 1,000. Gold's got to flush below 1,000 or go to 1,000 to get that 50% retracement and or shake out the final hangers on to capitulate this bear market once and for all. That's still possible. However, I think at this point, it's becoming more unlikely by the week as we see the strength in the mining stocks. And, the market has a way of confounding consensus. And there's a microcosm consensus that we needed to go to 1,000, amongst even like close friends of mine that are still waiting. They're waiting for it to get cheaper. A lot of us, after all this time, we're waiting. We're waiting to take action. That's why I've been adamant about my philosophy of accumulation, buying some positions, buying some physical gold and silver every month. It's not like you're doing it with a big part of your dry powder, but you're doing it consistently and you're socking away a position that ends up being extremely meaningful as you do it over a long period of time. And now I'm looking back over the last 6 months with what I've been accumulating, and it's looking pretty darn good. So I think we're going higher, and basically, there's a lot of other writing on the wall in terms of this global economic system. Gold can do well even when stocks are doing well. I don't believe that it necessarily has to be the end of the world. And we've got to go into a severe bear market in equities and the economy in the US to see gold perform well. We saw that through the early 2000s and even the mid early 2000s with gold and the equity markets and real estate and other things making big moves up together. But that said, if we see a crisis of confidence in currency, in paper currencies, and in governments, if there's a lot of doubt around governments and or some of the banks, recently we've had comments and some real concerns about some of the banks in another downside scenario. The alternative currencies, which gold is the longest for millennia, silver and things like Bitcoin, that's where the money's going to run. We also have a situation around the world where Japan just went to negative interest rates, literally meaning if you're going to park money with that country, you pay them. They don't even pay you. And if we see another flush or downside pressure in the U.S., we had the one blurb of interest rate raises in December, which was mainly, I think, symbolic by the Fed to show that they could. It's been a disaster since then. So the idea is, look, if they keep raising, that's not good for stocks. And if they stop raising, it's for a reason, because there's not a lot of real juice in the fundamentals of the economy. QE, again, doing it the same way is really a fruitless effort and has done nothing but kick the can down the road for quite some time. If we have negative rates that come into play in major countries, if it starts happening in Europe and potentially in the US, people are not going to be shy about buying gold, buying Bitcoin, and putting money to work in places that, are going to get them returns and have some safety. So we're in a ripe macro environment. We have been for years from a secular bull bear market standpoint. This is my biggest point to everyone. We've been since 2000, gold went up 10 years in a row. 10 years in a row without a down year. Then now we've had 4 calendar years down in a row. And if you take a look at a long-term cycle of, say, for example, 25 years, this is very healthy. This is exactly how you would expect a monster secular bull market to trade. The key is you have to take action when others don't, and you have to take contrary action, really. And what that means is that it's time to be buying more mining stocks and gold and silver, especially if you, have been waiting for a magic bell to ring. We're pretty much there. Personally, I've honed in on some of my key positions and said to myself, do I want to own more of these if this is the real deal? If it's not the real deal, can I afford to go through another year of a bear market and still survive? Are these prices that I feel good about? And some of the ideas I wanted to just share with you today to reiterate, we've got our plays like McEwen Mining, MUX, has absolutely been a stud. We've doubled our money there in literally the last 7 weeks in terms of price per share in the market. And when I started covering it in May of last year, which was $1.09 a share, we're almost at a double from those prices. This one's going to be a stud. New Gold, is up significantly since we started recommending it, around $2 a share. The way that this works, folks, is that the producers, those that are producing gold, where the price of gold's movement up or down affects their bottom line immediately, they're the ones that move first, and they move the most dramatically. And we're seeing that across the board with a lot of the majors that have had big moves. Even the mid-tier producers, some of my favorites like Kinross and New Gold, have had substantial moves. That's great. Those are still very, very strong buys on any pullbacks into a new bull cycle, which could cause these stocks to go up another 5 or 10x. What happens, though, next is that once people are convinced that this is the real deal move, we're going to wake up one morning and you're literally going to see the small ones, the juniors. They're going to reset and be 100, 200% higher overnight. It'll happen in like a week. You're going to see money start flowing in. We're seeing it with some of them already. Some of our plays in the premium gold investment letter have really rocketed. We've got everything from companies like Gold Quest, that have just doubled. These are still exploration stocks, but the higher quality ones are really starting to make a move. And next will be those little tiny juniors. And so there's still some real bargains in those juniors. One way for folks to get some really actionable ideas, we still have got for sale on goldinvestmentletter.com/blog on our blog, the special report. It's the top 10 junior gold stocks to own in the next bull cycle, which was published end of October in 2015. All relevant, all updated in terms of fundamentals. These are the top 10 I'm sticking with that we still cover. Probably half of them have moved huge, and about half of them are still really close to the prices that we put the buy recommendations out. But that's not going to last very much longer, as long as we see this market continue to impress us. So I would encourage you, if you want to be a part of the premium group and you would like some really fresh ideas, go ahead and grab that special report on the blog, and that'll get you started. I wanted to also update on the Gabelli Fund, which is GGN, which I've recommended for a growth and income play for those of you who want to have some exposure in the mining stocks, but also get paid for waiting. The dividend level on this is substantial. They're paying out 7 cents a month, and it's a $5 ETF. So we're talking about 16.5% annual interest rate, which is enormous in this environment. And this has been a $30 ETF, back in 2009, 2010. This has traded much, much higher. So it's been really smashed over the last few years. And the good news is there was talk about them lowering the dividend rate. They just announced that they're good through the first half of the year at that 7 cents per month in cash distribution. So I really like this one. This is one that I'm pretty loaded up on, and very, very happy that we'll be accumulating what will be, if we're in the new bull, we're going to see rising dividend rates instead of declining. I remember when they were paying out 14, 15 cents a month because the ETF was trading at 10, 12, 14 bucks a share. And that's where it'll go back to. So there's the opportunity with that one to have the exposure to the miners. The only negative is that they've got some exposure to the oil industry as well, but it's nominal compared to the gold miners. Really encourage people to have some GGN and really just accumulate those dividends, as well as have some likely capital gains. Also, again, still on board with McEwen, New Gold, and those picks. One of the things I wanted to mention for those of you that are accredited investors, really suggest you being active on Issuer Direct. Issuer.direct is the website, and we've got a new private placement for one of our favorites coming up. It's a junior that hasn't moved much, but we're getting a great discount to the market price and some very juicy warrants as well. They're going to be 5-year warrants, and this is how you really get much more juiced up returns as an individual investor. What we're basically doing is I'm going to some of these companies that I really like and saying, would you like $500,000? And if you would, let's do it at a price where, because we're aggregating our group, and we can do as little as 10 grand for individuals. We're aggregating our group. You give us a discount to the market, and you throw in a bunch of warrants, and give us the time that we want on the maturity. And it's good for everybody because the company gets cashed up at a decent price. We get really attractive pricing compared to the market, and then the warrants give us a real kicker on the upside for taking the risk. And that deal, there's a new one. You'll see it actually on the website. It's going to be announced this week. It's one that I'm going to talk about a lot more, and it's going to also, I think that stock has the ability in a new cycle, 12 months in, 9 months into 12 months in, this could be a 10 bagger. I think it'll double or triple shortly after the financing is done in the next 30 days. And that's going to be a good one. Also with Patriot Gold, I have a call with the chairman tomorrow. But I will say that I believe that they will take more money in at 5 cents at the private placement. If you missed it, or there was just not the follow-up from the company or myself at the end of last year, if you were interested in the Patriot private placement at 5 cents, I would suggest emailing me, Eric at Phenom, PHENOM, .ventures, or reply to the email that you get here, and just let me know if you'd like to be on the list for the Patriot. I think my guess is they're going to take another 150 at the 5 cent level, because I don't believe that they closed it out completely, and so I would jump on that one as well, which is a nice discount to market. And really the Patriot story is fantastic, and even though they lost the arbitration, we've got their partner Northern Vertex just announced a $2.5 million private placement. They have potentially a significant bank facility to go into production from a major bank in Canada for Moss. And Patriot has a 3% net smelter royalty, which comes right off the top of gold sales. And so the conservative numbers with gold in the arena that it's in now and the production that Northern Vertex put out, we're talking about at least $2 million a year in cash flow to Patriot, which has got a $3 million and change market cap. That will go up by a factor of 5 to 10, as this gets closer to production, and it also will go up in a better gold market. So these are the ideas that I think those of you that are accredited, if you can do the placements, you want to be laying those chips on the table, get the discounts, get the warrants in some cases. And if you're not, good news is too that non-accredited investors are going to be able to begin investing in these private placements in the summer in America because of the Jobs Act. That's a new function of the law. And so some of you that have registered on Issuer Direct but you're not accredited, you will get access to some deal flow in the second half of the year. So that'll be great. And lastly, just to mention, also on Issuer Direct, we've got this is my firm, by the way, Issuer Direct. It was set up in large part to facilitate the congregation of myself and subscribers to command good terms in junior miners and even in other sectors eventually. But right now the play is in the miners to command really good terms and warrants by investing together and cherry picking the deals that we like. And Issuer Direct was set up in that fashion, and it allows the companies to showcase what they have in a professional way, and it gives us the opportunity as a company where we end up providing a service to both sides. And one of the other areas that we've showcased on the website is funds and money managers that are extraordinary in terms of their returns and just have something unique and different. And you'll find that if you click the funds tab in the middle of the page on issuer.direct, you'll see what I've been talking about recently is Mediatrix Capital. I've got to tell you guys that, because this is a product that is open to accredited and non-accredited, and they also take IRA money, everybody should take a look at this, because this is the type of system that ends up making really good returns regardless of what's going on in the economy or in the stock market. It's a completely uncorrelated asset class. And, for somebody to put in 50 grand or 100 grand or 250 grand to a system like this is smart, because, it's not going to trade along with your stocks or your bonds or your real estate or really anything you've got in your portfolio. They've got a system that is working really well. 26 months of profits in a row last year after the fees of Mediatrix for managing the accounts, over 130% return. And this is a monthly thing, so you can actually take cash flow out. If you're a retiree or you need income or you want income, you can take the distributions on a monthly basis. They've been audited It's something I've looked into deeply. I feel confident this isn't a Bernie Madoff situation. They are offshore, but there's reasons for that, and they also are not the firm that handles any of the money or the accounts or the administration. It's done through the brokerages, and Mediatrix is a fiduciary that has power of attorney on managed accounts. So it's a managed account situation where they would manage your account and take a percentage of the profits. It's not a fund per se, even though they will be launching a hedge fund in Q2. This is an opportunity for people to have a managed account in really something unique. And frankly, until they are not spitting out these type of returns, I'm going to be adding money to it, regularly as we go. So if you're interested in Mediatrix, just shoot me an email. I'll introduce you to those guys, and they'll give you the scoop. That's it for now. I just wanted to give this video update and check in with everyone. There's a lot of opportunity trading the gold stocks. There's a lot of opportunity in the long term in this new, what looks like a bullish cycle. Again, remember, whatever's going to happen in the short term, once a bull market starts, a cyclical bull market in gold and the miners, this is going to last for a couple of years. And some of these stocks, the smaller ones, the big ones too, but the juniors, they are literally, and you can take this to the bank, they're going to go up 20, 50, 100 fold from some of the prices today. That's the Patriots, the Bravada Golds, these small ones that are very, very cheap right now and trading at a nickel or a dime and are going to go to multi-dollars a share because they make that initial bump soon. But then as this bull market matures, money flows down and trickles down into these plays, and the fair value is much higher than it is today. But even remember, the pendulum swings really, really badly in a bear market. It gets too bad. And then in the bull cycle, it gets too good, and people overpay for these assets. And we're talking about, some of these deals that survive, that are going to survive, are now it's a thinned herd. There's even less companies to invest in, and there's probably going to be a lot of capital looking to be parked in the mining stocks as gold goes back up and trades into the mid, call it 1,1500 this year. I think that's very likely. And, my target is $3,200 gold and $150 silver by the time we get the end of this bull market. And those are my realistic low targets. Some people talk about 20,000 gold. That stuff could happen. But listen, if gold even goes to 2,000, these mining stocks are going to be up 20 or 30 times, some of the small ones. So you've got to own some of these. You got to take action when, you don't want to. And you don't have to bet the ranch. You don't have to do everything at once. You take action on a portion. Start chipping away. It doesn't have to be perfect. It's about making progress, not being perfect. We put a lot of pressure on ourselves to try to catch the bottom, sell at the top. That's all nonsense. You need to own an asset class at the beginning of a bull cycle and hold it through, or most of it through that cycle, and get rich, period. That's it for tonight. Have a good night.